Hey, what up? What up? It is the October 2nd. This year is flying by fast. All right, so we're just gonna go over a quick PowerPoint of the strategy again. Again, like I said, we want to beat this dead horse until you get it in your thick skulls that you don't need so many strategic elaborate plans and elaborate strategies to make some money in the market. All right, but I said it to say this, that having a daily trading routine is crucial to if you want to achieve consistent gains in trade in this trading world. If um, It's what separates the successful traders from the ones that are still trying to figure things out. All right, in this video, I'm gonna share my own trading routine that's helped me achieve consistent gains, and I hope it'll inspire you a little bit to create your own. All right, because trust me, with anything in this world, without a structured routine, uh, in general, you find yourself making emotional decisions, especially when it comes to trading based on impulse reactions and market fluctuations that can lead to a string of losses that can be devastating to your trading account. You might also miss out on potential trading opportunities because you're not prepared and you're not focused. Another common challenge is the lack of discipline, which can cause you to deviate from your strategy and make impulse trades. We've all been there. Trust me. I take a trade and I lose, and I'm like, man, I didn't even follow anything in my trading plan. I didn't go down the list. And that happens a lot, especially when you're not disciplined. And finally, many traders struggle with staying organized and keeping track of their progress, which make it difficult to identify areas of improvement. And what I do is, I'm going to show you in a second, what I do is I just make a PowerPoint of each trade I have, and then I write notes on the side of why I took the trade, why I won the trade, why I lost the trade, why I didn't take the trade, things of that nature. But when you have a routine, when you don't have a routine, you're essentially flying blind, reacting to the market without a clear plan or strategy. That can lead to a cycle of fear and greed, causing you to make mistakes that can be costly. Without a routine, you're more likely to get caught up in the emotions of trading rather than making logical, data-driven decisions. And me personally, if you just starting off, I firmly believe you need to follow the price action on a daily time frame. All right. So we're gonna go over this, and especially if you're brand new, you shouldn't even be going anything less than, I would say, the daily time frame, 4 hour time frame. Reason being is because if you're new, sometimes the price action moves too fast, you can't make the right decision, and you're still trying to figure yourself out what kind of plan you want. So how you can avoid these common pitfalls is to and achieve consistent gains in your trading is the answer lies in creating a daily trading routine that works for you. And trust me, if you trade in a daily time frame, you can still have your life, and you only have to check the charts at 5 p.m., 5 to 6 p.m. I say more than likely, I mean, not more than likely. Me personally, I check the charts at 5 p.m. and I look for a setup on the daily time frame. And I don't take the trade till about 6 o'clock Central Standard Time, being because on the forex market, in the forex world, the spreads widen up at 4 or 5 o'clock, then they lower around 6 or 7 o'clock. So I typically look at the market, which is 4 o'clock for me Central Standard Time. Then around 5 or 6, I'll look at it when the spread is lower to enter the trade. But I say that to say this, that when you trade the daily time frame, right, you have all day for that candle to do what it's going to do. Price action is going to do what it's going to do. So you have, that day, or if you see a setup and you have another day, you have ample amount of time to take your time and look and make sure, hey, does this setup meet my criteria for taking a buy or sell trade? You get what I'm saying? All right, an effective daily trading routine, or effective routine, is three key components: is market analysis, risk management, and journaling. That's all you need. Market analysis involves staying up to date with the market and the developments, which honestly, trading the daily time frame, the news and all that stuff, you don't even have to worry about that, because all that takes place throughout the day. And by the time you get to it, it's already done its price action move. So it helps you, get a good analysis on where the market is going. All right. And using information, risk management, trading the daily time frame gives you enough time to set up how much risk you want. If you don't know it offhand, if you don't know what a one lot is for 125 pips, or 0.05 lot for 50 pips, then you have time to go to my FX book and or do the math. You know what I'm saying? All right. Risk management definitely is crucial, all right, to protecting your trading account and minimizing losses. Journaling is a powerful tool. All right, that's why I say I use the PowerPoint that helps me journal. There's a lot of other fancy journals out there. Me being prior military, I love PowerPoint or I love Microsoft Word, but PowerPoint is more efficient for me because I can paste the setup or what happened, and I can write some notes on the side. And then that way, if it's like 100-page PowerPoint, I can go back and study these charts and visualize and see, okay, this is a setup, this is a good setup, this is a bad setup. All right. And by incorporating these three components on your daily routine, you'll be better equipped to make informed decisions. Data-driven decisions, they can help you achieve constant gains. And you'll also be more disciplined and focused, which can help you stay on track to avoid common mistakes. All right. Enough of my rant. All right. So, but I also remember when I did first started trading, I promise you, I was all over the place. Impulsive decisions, getting caught up in emotions, FOMO. When I see nines flying up, I wanted to get in front of it, the moving train. And then I had a turning point when I realized that I needed to create a structured routine. If I wanted to succeed, I couldn't be using different type of indicators, changing indicators when I lose, moving to the next best thing. I couldn't do that. All right. So I started by implementing a daily journaling practice. Like I say, at 5 o'clock every single day. So I trade the daily time frame. Some days I trade now that I've been doing it 6 years, if I do trade like futures on the lower time frame, I still use PowerPoint. All right. So I can reflect on these trades and identify areas of improvement from where I built my routine to include market analysis and risk management. It wasn't easy, but trust me, it's worth it. Just build that solid plan and that foundation. Since then, I've made significant improvements in my trading results, and I'm confident that following the same thing as far as consistency in journaling and implementing those three identifiers can help you as well. Now, trust me, the way I see the market is definitely not going to be the way you see it, but hopefully I can give you some insight on exactly what we got going on. All right, and one of the most powerful insight I've gained from daily trading routine is the importance of discipline and focus. Those are the two things, discipline and focus. When you have a clear plan and a strategy, you're less likely to get caught up in the emotions of the market, and you will more than likely stick to your plan. All right, now trust me, on the daily time frame, you will lose some. All right, but here's the key. There's over 30-something pairs I trade, and I can see the setup, like clockwork. Now, sometimes I see a setup and it goes the other way. But guess what? If I'm trading 32 pairs or I'm trading, let's say 10 pairs throughout the month, if I lose one, that's fine because I still won 9. All right. Let's move over to the PowerPoint. That was my 10-minute rant. All right, let's pull this up. All right. Let's go over here. All right, let me move myself over here. You know what? Let's do this because I got the pairs coming up. All right. All right, let me go back. So here is the September Strategy Trade Study Guide. All right, I will put this in the comments below if you would like it. Or, matter of fact, I'm not gonna make it that easy. If you go to my Discord group, the link is in the description below. You can go ahead and join my Discord or either my Telegram. I am more active now. I used to say I'm more active in Telegram, but I'm more active in Discord because it's more not professional. I would say more professional, but it's set up properly. You know what I'm saying? Because in Telegram, you tend to lose things that I put up there. The content gets lost in all the text messages, but it's more well put together and well set up in Discord. So this will be in the study guide section of the Discord. The Discord is free. All right. So make sure you jump in there. All right. Just trust me. Look, this month's strategy, and this is the table of contents. We're going to go over these pairs. This month's strategy focus on identifying trade setups based on the low of a signal candle for buy opportunities and the high of the single candle on the sell opportunities. We always do in my group 2 candle lows and 2 candle highs, but I'm for September, I did an analysis on all the pairs of how good this one candle low or one candle high works when you're going with the trend. As you study this concept, it's more important to integrate it with your understanding of trend recognition, as well as key support and resistance levels while practicing these setups. Keep in mind that although you are viewing historical data, this goal is to enhance your ability to identify these patterns in real time. By doing so, you will improve your recognition of potential setups when forward trading and leading to more informed decisions. All right, just remember, when you see the setup is definitely very much so simple, but you do have to look at, which way the trend is going, key major support and resistance levels, things of that nature. All right. So if you trade in the the daily time frame, and you want to go, you always want to go one up, for the weekly. So if the weekly is a strong above the 20 EMA and the daily is above the 20 EMA, and then if you have the monthly above the 20 EMA, that means you're going to go for, once you get in that trade early, you're going to potentially go for a nice, nice swing trade on the daily time frame. And on a swing trade on the daily time frame could take, 2-3, weeks if you want to hold that long. But then you go into position size and then. All right, let's move to the next one. All right, AUDCAD, you can see overall the trend is bullish. So the break of the break is invalid if you put the 200, if you would show trend to use the higher time frame. All right. But we're not worried about the 200. All right. Why did I put 200? Break is invalid if you put, okay, yeah. That's because you're looking on the higher time frame. All right. But if you look, this is normally what we do for sale, for buy signals. 2 candle lows of the 20 EMA. You can see it broke. All right. As you can see right here, this actually hits the, we don't want this one. We want this one. But overall, the trend is bullish, so we wouldn't take these. We're going to wait for that break up here. 2 candle lows, jump in right here. So if you can see right here, this is my 1 candle low, my ATR, and then we take the 101. And if you can see right here on the Euro USD, be careful by taking this trade because there was a support price right here. All right, there was a support price, but overall it was bearish. So once we see that, if it broke right here, this support of 1.7647, we can potentially take it for a longer trade. As you can see, like I said, be close to retest. But if you can see right here, it broke the previous month before, 2 candle lows. This is my 1 candle low. Jump in, use the ATR to get a 1-for-1. All right, but if you switch to Heikin-Nashi, you could continue going on. That shows you a strong trend. If you look at the retest right here, this is why we took another one right here. You could take this this trade right here. If you look, break, retest, boom. All right, let's go to the next slide. All right, CAD JPY. All right, this trade did hit TP before as a swing, and I mean last month, and there was an election that drove this price this way. But if you look, 1 candle break, we did the ATR. This trade hit TP before the swing, perfect setups, and it gave me twice a month. So that's definitely a good plus right here. You start to see a pattern, right? EuroCAD, you can see right here, the overall trend is bullish. All right. If you look right here, this is the month of September. We're not looking over here. Look, we look at this whole break, retest. We look right here, 1 candle low. All right. Jump in, ATR was 71 pips. Boom, went for 71 before it came back down. All right. And hopefully I'm not going too fast for you guys, but this is the reason why I document these trades every month on this is my journal, so I can see it. Okay, September, all these pairs, this what it did. So then I look at it, and if I can see this type of thing, and I can show you a loss right here. So if you look right here at the beginning of the month, boom, it was overall bullish. But look, we had a break right here, and more than likely with the spread, like I said, more than likely with the spread, this would have been, I would have been stopped out with minus 81 pips. But if you look towards the middle of the month, all right, second opportunity for the candle low for a buy signal of 98. All right, even though there was profit of 17 on these pairs, so there was a profit of 17 pips total from this pair because I lost 81 pips and then I got 98 pips from here. So I got a profit of 17 pips on this pair by itself. All right, if you can see, 1 candle low, and there was a 98 ATR, 1-for-1. Let's go to the next slide. All right, see right here, One candle low, jump in. This is 100 and NZD JPY for this strategy. And if you don't understand what I'm talking about in this strategy, make sure you go down below or go up here and look at one of my previous videos explaining the strategy as a whole. Right now, this is not the video that you really want to be on if you just first learning how to trade. You want to go take a look at some of my other videos that explaining the strategy as a whole, because this is the one candle break. The other one I do is the 2 candle break, but these are all on the daily time frames. All on the daily time frames. All right. The break, the candle high. All right. The break right here, the ATR was 128. All right. We took this one right here. Boom. All right. I'm telling you on JPY pairs, this strategy works well. One candle break. Boom. Right here, 126 pips. All right. GBP USD, beginning of the month right here, you see kind of played around. All right, no breaks, no severe breaks right here. One candle low, it broke. 92 GU. All right, invalid. See right here, this is the invalid trades. You don't look, once it does this, this is on chef, pound chef. All right, look, it broke. All the wicks are touching right here. Boom, this is definitely invalid. It's too far away from the ATR for me. All right, you can see this is kind of like some consolidation. And if we look right here, it broke up above. All right, one candle high. I'm sorry, one candle low, 76 pips. Boom. You see the pattern here that I'm getting at? All right, see the pattern here? 35 is the ATR. 35 is the ATR. And NZD chef. All right, 1 for 1. And most of these trades on the daily time frame happen after all the news is happening. Now, sometime on JPY, you might get that first little break at the beginning of the month. But I can tell you most of these trades happen around this in September, happen around the second week or the third week. And then the fourth week, it kind of fizzled out or just continued on to what the direction it was going. All right, if you look at one candle break, the 48 ATR, as you can see, the very next day, and it continue on for the rest of the month. All right. NZD USD, all right, broke through. Well, you see the trend. Overall, when you look at these setups, look at the trend. Make sure it's not consolidation and you taking a bullish, bearish or bullish trade. Make sure it's going bullish before you take a bearish trade. See what I'm saying? It's all about knowing those. The market only moves one way, up, down, and sideways. All right, doesn't move diagonal, even though you think it might. All right, here we go. Right here, NCD. All right, at the beginning of the month, boom, look, 1, 2. So what you want to see is 2 breaks. You want to see the 2 breaks. You want to see the break across the EMA, and then the other one that doesn't touch the EMA. That's the candle you want. But typically, and you don't want this, the third one over here. I'll leave that alone. Now, sometimes I might miss that one, but it's okay. If you see right here, retest. Boom, it broke, and then retest upward. This is the middle of the month. So we already know which way that was going. All right, NCD CAD, patience is set up on the 1 candle low. All right, nothing. Boom, right here. All right, next. All right, you can see right here, this is another JPY pair. JPY pairs in September gave us 2 trades, good signal trades that month. All right, 2 setups in the month, 1 candle high and 1 candle low. All right, see what I'm getting at? And then at the bottom down here on my PowerPoint, I write some more notes if I got into these trades. I put all these trades in the group when I put normally when I see them. All right, and then hopefully if you don't have a group that you would like to join to talk about trading on the daily time frame and not being so greedy, I would love to have you into the group. All right, if you look right here, all right, boom, boom, boom. All right, let's continue on. All right, and if you look right here, 17 ATR, I'm not 17 ATR, Chef JPY, all right, broke, candle low, boom, broke, boom. All right, 151 pips here, 148 pips here. All right, Euro JPY. I think all the JPY gave us plays at the beginning and the end of the month, which is a beautiful thing. You can see right here, 238 pips here, 250 here. As you can see, 1, 2. There we go. Look at that. All right, look at that. Boom, candle high. And look right here. As you can see, we took a loss. So minus 8 point pip loss right here. Right here, boom. So what you want to see is, you don't want to see this most of the time when you take this trade. You want to see something like this. You want to see it break like that. Boom. See that? That shows you a little impulse movement in a decision that the buyers or the bulls or the bears are taking over for that few days. See right here, boom. And this was right when the news happened that day. So 8 pip loss on that pair in total for the month. All right, you can see right here, consolidation playing around at this price. Finally broke at 84023, and boom. All right. And if you look at the Dow Jones, 600 points, 617 points on the ATR. All right. This is my ATR down here, 5-period SMA ATR. All right. Didn't do anything at the beginning of the month. Around the 12th, 13th of the month, boom, shot up and continued on in that direction. All right. If you look at NAS 100 right here, see, now this one actually played out. But if you can see the impulse candle right here, boom, it. All right. And then you look right here, boom, upward. All right. That's why you just have to know these pairs sometimes. Sometimes you can get in it and it's a perfect setup. And sometimes you jump in it with that perfect setup and it immediately tells you you're wrong and it goes against you. You know what I'm saying? All right, we didn't take this one because this touched the ATR. SMA. Broke right here towards the end of the month. What I've seen, and I'm not 100% accurate, but what I've seen when I take these trades towards the second, third, and fourth week of the month, if I take the trade in the second or third week of the month, it normally continues on into the direction it's supposed to be going to begin with, unless like JPY pairs last month. But you got to think JPY pairs had been trending upward for the last 3 to 4 months. All right, let's move to the very last slide. All right, even if we took this trade, it was a loss. We were recovering profit. See, you look right here, boom. All right, we took that trade, immediately went against us. All right, ATR was 88. We lost 88 pips. If you look right here towards the middle of the month, all right, the ATR was 88. Again, no, this one couldn't have been 88. All right, if you look right here, always pay attention to the overall trend. If you took this trade, you would still recover from this pair. So if you lost 88 points right here on the S&P 500, then you gain your specifically over 100 points for here. So you actually got plus 35 points for the month on this pair. All right, I hope all of this made sense to you. All right, and let me bring myself back up. All right. All right. So in conclusion, having a daily trading routine is essential if you want to achieve consistent gains in the trading world. By incorporating market analysis, risk management, and journaling into your routine, you'll be better equipped to make informed, data-driven decisions that can help you succeed. Remember, having a day trading routine is not a one-time task. It's an ongoing process that requires discipline and focus. But I promise you, it is worth it. So trust me, pay attention, be methodical, and just don't overthink it. You know what I'm saying? Don't overthink it. A lot of people think they got to get in this thing. They got to have the best trading strategy, and all these elaborate schemes. You don't. Just keep it simple, man. And I promise you, you go a long way. All right. But I'd love to hear from you. What's your daily trading routine? You have any tips or strategies that have helped you achieve consistent gains? Let me know in the comments below. And don't forget to check out my other videos for more trading tips. And just remember, if you're brand new to the game or you're not consistent right now, just give my strategy a try for a few months and see how it works for you on the daily time frame before you go back down. If you're not consistent on the lower time frame, go to daily time frame. Get consistent, learn a strategy, have discipline, learn the right risk management, and then go back down to the 15 to the hour or 5-minute time frame. But if you're not profitable at all, I would say go back up to the higher time frame. All right. Hopefully that made sense to you guys. You guys have a good, blessed trading month, and I'll see you guys in the next video.